Have you ever asked yourself, what should I invest my money in? And maybe a follow-up question that you might have for that is, well, what is there to invest our money in? And maybe perhaps even there's another question you have to ask is like, what's investing? Like, what are we doing when we invest? Well, I'm hoping to give a little bit of an explanation to that today in our show. But before we get things underway, be sure to subscribe and follow us on the YouTube channel, follow us on our social media platforms and sign up to our newsletter. We'd love to have your further participation in the information that we're providing to you. So, what's this question of investing? Like where are we putting our money and why do we invest? Well, a little bit of why do we invest is that we're trying to make money on our money. Instead of us having all of our earnings coming from our own efforts, the intent of investing is to take some money that's passive, usually in nature, put it into something else and have that grow and make money all on its own. But it still begs the question then of, well, what do you invest in? And the truth is there's a whole range or spectrum of different ways, different things to invest your money in, and different ways by which to invest that money. And you'll hear a whole cacophony of advice and direction and guidance as to what to do with your dollars. And really depending on maybe your risk profile and your risk tolerance and your background and your experience, especially business acumen, there will be different ways in which you decide to invest your money. I don't think there is a one size fits all answer here, but that this is the way you should do it. Maybe the real question then that we should be asking is, well, how do we invest? How do I invest? How does our company invest money for clients? And the way we do that is what's called commonly a passive broad market buy and hold index approach, in which we're looking to buy into various asset classes at different price points and different weightings within a portfolio, all in hopes of buying low and selling high. So what does some of that mean then? What some of it means is that, not everything is the same thing. That's kind of stating a bit of a truism, but just to, bear with me, not everything is the same thing. So that means there's different things to be investing in. And also that tends to mean that there's different price points, this because things are different and they, work differently in different economic environments. What something is valued at one point in time as a type of investment may be high or low in terms of its historical, desirability, one might describe it as, than something else over time. And so what could make sense would be to invest in a little bit of everything, but in particular ways, looking for those things that are currently not doing so well, because that'll be reflected in their prices and presumably be lower price points for the given earnings. And we'll be able to have a better buying opportunity. And so we have what are known as asset classes. That's like a grouping of investments or underlying financial assets that more or less function the same way, fall under the same regulatory body, or do the same thing. And you could segment the marketplace up into a whole number of different asset classes. It kind of depends on how you want to slice and dice it. We have about 12 to 14 that we feel are fairly comfortable and confident in. And what we kind of mean by that, I think it's best described almost like different crops in an agricultural field. It's, you have corn and soybeans, and, maybe you've got fruit trees, and then you got nut trees, and you got all these different types of crops that you could grow. Asset classes are kind of that same thing. It's just this mixture of different, stocks and bonds, large companies, small companies, U.S. backed or government backed bond holdings or corporate bond holdings, something that's not well rated in terms of its credit rating, or something that's highly rated and super safe. It provides this different mixture of investment classes, and the demand, the need for those varies in the marketplace. And so what you're looking for when you do asset class investing is you want to kind of build out a portfolio of what you have identified as the asset classes that you want to pursue. And that could be, again, as simple as maybe just a couple, 2, 3, or 4, if you cut the market very broadly. But I think reasonably there could be as many as 12 to 14. And, these could be, equity holdings, both domestically and foreign based, maybe emerging markets, large companies, foreign and internationally based, maybe small companies, maybe companies that have what's called a value tilt versus a growth tilt. We could have bond holdings of similar mixture as well, whether or not we have large municipalities or states, or government issuance, both foreign and domestic. This has this full spectrum. Yeah, we haven't even made mention of maybe real estate holdings or commodities. There's a full spectrum of different possibilities in which you're investing your money. And so, like an asset class approach, perhaps just to start to wind this together, is to identify the asset classes that you think are going to produce a positive return in time. Historically, they have produced a positive return, and previously, and we expect them to do that at some point again in the future. And we also think that they're not, for there to be a real bang for our buck. Each of the asset classes is not quite the same type as the next asset class, because if they're more or less the same type, then what's the point of buying them? We'll just buy the one thing. So each of them is what's called non-correlated to the next, or not completely in conjunction, or conjoined, where they move together. And so this allows then for this divergence of price, where maybe one asset class is doing particularly well and has a high price, and then which probably means it's actually not going to be that great of an investment because we're going to overpay for the expected earnings. Whereas something, on the other hand, maybe isn't particularly well priced. It has a risk associated with it. It's not particularly well loved, which again, some of the counterintuitiveness of investing, that actually means it's a good time to be buying that. And so a well-built portfolio of asset classes has various weights to these. And as you buy into the market or sell out of the market, we're selectively deciding which of the asset classes do we think are a good asset class to buy at this point in time, which ones aren't such a good one to hold. And maybe it's actually good for us to let go of them. We'll take some of our winnings off the table. And then we proceed accordingly, and so this is, our approach, our take, and what we think is the right way to go. I don't think it's the only way to go, and I'm sure you will hear and see others who may even vigorously disagree, perhaps with what I've just alluded to. But I think it's what makes sense. It's what we do, and it's what I would recommend you to have for your consideration. So, last comment on here is, if you're interested in this subject matter, there's a number of books to read, and it's, my preferred book, what I think is the best out there, is All About Asset Allocation by Rick Ferry. I think is a splendid book that's a good introduction to the subject matter. And then if you want to go even deeper and try to get behind modern portfolio theory and the whole construction of a portfolio, what makes sense, like what's the right mix, you could get into The Intelligent Asset Allocator with William Bernstein. Those two books, the All About Asset Allocation by Rick Ferry and The Intelligent Asset Allocator by William Bernstein, if you read the two of those, I think that'll set you well on your pathway to understanding how to build an investment portfolio. Hope that's helpful for you, folks. Of course, if you're looking for help in this space and this is just stuff you'd rather not want to dig into, let's have you reach out and give us a call. We'd love to set up an introductory chat. We love helping, physicians, doctors, folks who are in their pathway to earn some money and do well for themselves, but just aren't sure where to go and what to do with it. Give us a call and be in touch with us. We'd love to work with you and see about maybe setting up an engagement. Have a great day.